My name is Funmi Adepoju, and I'm going to be leading the discussion this afternoon. If you are here or if you're going to be attending the Nigeria session, please could you come in? Please let's get our people in so that we can start. I know it's sort of lunch time. Please, if you're going to be speaking, please could you come to the front so you get your mic in. Oyebuchim, I'm not seeing you yet. And Sumibola, please do come get your mics. Please, could we have our slides up so that we can do the presentation? Thank you. Good afternoon, everyone, and welcome to the Nigeria Investment Summit. We are going to be telling you a little bit about Nigeria, and we hope that after today, you would reach out to those of us that will be on the stage, the organizations represented here, and hopefully you'll come invest in Nigeria particularly. All right, so talking about Nigeria, I'm sure a lot of us know the things that have been happening in Nigeria. This year we've had a change of government. We have a new president that came in, that was sworn in May of 2023. So we have a change in government going on, but the country has also been going through a bit of financial turbulence, which we are not running away from, but we believe that we are going to be coming out of it very soon. Some of the things that we can say or that we have on the board tells you where we currently stand. Inflation rate is extremely high. Our reserve is not so high. Our foreign reserve is not so high right now. We've had a lot of volatility in the foreign exchange rates, but that is where we stand right now. But we are hoping for a better future even as we move on with a new administration. Just to give you some perspective of what has happened, inflation, like we said, has been uptrending, but we do believe that by the time we begin to get into next year and things begin to settle down a bit, especially on the foreign exchange end, we hope that this will, the pressures will come down slightly. Crude oil majorly has been in the favor of the country in terms of higher crude oil rates in recent years. That's in terms of crude oil. Then also looking at the exchange rate. Before now, those who have dealt with Nigeria, we know that we had two markets. We had the official rate and we had the parallel market, or what we fondly refer to as the black market. And this, confused a lot of investors and also made it difficult for investors to exit when they needed to exit. Part of what the new administration is trying to do is to merge and to bring together these different rates so that it's easier for investors to have an idea of what they are doing and how easy it's going to be to actually exit. While I wouldn't say there's 100% congruence right now between the official markets and the parallel markets, but the spreads have narrowed significantly, and it's becoming a little bit easier for people to actually exit the market with their foreign currencies. So moving forward, what do we see? We have a new administration, and this new administration, as you can expect, it's a new administration that's just coming in. They are trying to settle down, and unfortunately, they do not have the time to actually maybe just settle in before they get to the job. Some of what they have tried to do, because I think before the elections, there was no confidence in the market at all about what's going to happen with Nigeria. But I think part of what they try to do is to see how they can quickly get investors into a more comfortable position and begin to work on that. So one of the first things they did was to crash the exchange rate markets and to merge with the parallel market to try and give that confidence. They also tried their best to remove the subsidy on the imported finished petroleum products. While I would not say it's 100% right now removal, they tried to do 100% removal, but because right now, because of the state in which the economy is in, it was also important for them to sort of try to put a little bit of cushion, because the effect and the deflationary trend of that was getting too high, and therefore there is still a bit of the subsidy, but it's not as high as what we used to have in the markets before. These are some of the targets that the government of Nigeria is trying to achieve over the next 2 terms. Double the economy, achieve average of 7% average annual GDP growth. For those of us who know Nigeria very well, in the late 90s and early 2000s, 7%, 8% was not strange for the country. But in recent years, we've been struggling to grow between 2% to 4% annually, and often below 3%. So what the government is trying to do is to get the economy back on track, and therefore achieve higher levels of GDP growth. Of course, as you do this, it would also result in lifting more people out of the poverty line, because the number of Nigerians below the poverty line, especially with the devaluation, the last devaluation of the currency, is actually very terrible. Create the enabling environment to generate over 50 million jobs. And one of the things that they are trying to do in that regard as well is to work on the multiple tax situations, just to make it easier for investors to understand what's happening in that market. We are beginning to see some interest in the markets, from investors. I remember when the currency thing was done, one of my very good friends from the US, in fact, before I knew in Nigeria, he already sent me a link to, show how excited he was that was actually happening. Of course, in the immediate term, it could mean a lot of difficulty for the populace, but we know and we trust that with time, this is going to actually improve significantly. So I'm not going to spend too much time on the outlook. Number one, because I don't want to put it to sleep by talking for too long. But I have some experts in the room as well that are going to be joining me, and we're going to be talking about what we expect to see in the Nigerian economy, even as we move forward. Before I call on to the stage all the speakers that I have today, I'd just like to let you know that this particular session is actually sponsored by 2 organizations. We have the company called Pearl Mutual. Sorry, I said Pearl Mutual. Yeah, that's a habit. That's Pearl Bridge Capital Managers. And I am the managing partner of Pearl Bridge Capital Managers. And we have as well, this is just a little bit about us, what we do. We are a fund management company. Right now, we're trying to raise a $50 million fund that will focus on women and youth. And we don't only invest in women-owned businesses, but we encourage businesses and industries and sectors that employ a high level of women and the youth. The second organization that is also sponsoring this session is Alpha Morgan Capital. They are regulated by the SEC, and they invest in different asset classes, including fixed income, equities, land, and a lot of other factors as well. They are going to also be on the stage, and you get to ask questions as well as to what they do. And if you would like to know more about both organizations, please just take a picture of either of those QR codes, and you would have the information. And in just a minute, I'm going to call on the people that I'm going to have with me on the stage. Please just help me encourage them as they come up by clapping for them. The first person I'm going to bring on stage is Mr. George Imade. He is the Managing Director, Alpha Morgan Capital Advisory Partners Limited, which is the investment banking arm of the Alpha Morgan Group. He has several years of work experience in the investment banking industry, and he has handled very many landmark capital markets, structured finance, and advisory services transactions over the years. Please join me in welcoming Mr. George Imade.
Thank you.
If you have been to the next floor, that's the second floor, you would have seen stairs, and we have one of their representatives joining us today. We have here with us Yvette Dimiri. She's the director for Stairs Insights, a product that provides macro and industry data and insights to facilitate decision-making for global organizations that are investing and operating in Africa. Please join me in welcoming Yvette as she comes onto stage. Is Onyebuchi here? Yeah, all right. So we have, the next person I'm going to call on stage is Onyebuchi. She is currently the Senior Vice President at CardinalStone Partners Limited and leads the investment banking division. She has over 13 years hands-on investment banking experience spanning various sectors. Please join me in welcoming Onyebuchi. Onyebuchi, do you have your mic yet? Not yet. Please, I need someone to help Onyebuchi with her mic. And last but not the least, I have with me Sumibola Oni. She holds an interdisciplinary science degree from Carleton University, Canada. She's an ESG analyst and strategy development consultant at Pear Mutual Consulting, where she helps businesses grow and thrive in a changing world. She also supports various functions within the organization. She is driven by creating and implementing sustainable solutions for social impact. She has the CFA certificate in ESG investing and has taken several other courses in that regard as well. Join me in welcoming Sumibola Oni to the stage. So these are the panelists that I have for today, and we are going to be discussing quite a few questions. Please just give me a minute. Yes. I'm going to be taking it not in any particular order. I hope that is okay. So today we're going to be talking about Nigeria and so many things that have happened in Nigeria. I'm sure people have been looking at us since January and wondering how we were going to make it. Funnily, before we start, when the election started, I know a few friends, Nigerians, that were not so sure of how the election were going to end, so they left. But I had a lot of foreigners who were flying into the country, and one of them, a very, very good friend of mine, he's British. I said, why are you coming in when others are running away? He said, nothing is going to happen to Nigeria. Nigeria is going to be here for the long haul. So I hope we're going to be able to convince these investors that Nigeria is here for the long haul. All right, so Yvette, I'm going to start with you because of what you do and on the macro level. What are the key reforms that the new administration has undertaken, in addition to what we saw earlier, to restore macroeconomic stability and boost growth?
Yeah, thank you. I hope my mic is working, but let me know. So I think just similar to what you pointed out during your presentation, there are two key reforms that are most exciting. I think there are a number of reforms actually in the last few months that this administration has taken, has come into power. What we've seen primarily with the foreign exchange reforms is that we're moving towards a more market-driven foreign exchange rate. That's what's so exciting, where you're seeing more market-like conditions. If you think about the sort of like conditions for a market, one of them being that we have the law of one price, for example. Previously in Nigeria, several different exchange rate windows. Some people have access, some people didn't have access to it. Even larger financial institutions oftentimes struggled to repatriate their funds at an official rate. So what we're seeing is more market-like conditions. Now the expectation over the long term is convergence. Obviously today that's not yet the case, but we do expect that to happen at Steers. Now the second thing that is exciting for people is the, I don't think it's exciting for Nigerian citizens, but in terms of a government stance, is the removal of the petrol subsidy. Now, what that has done is, for the first time, instead of essentially the government setting the price of petrol at the pump, we're again moving more towards market-like conditions where you have a number of things that can now influence the price of petrol that Nigerians face, including, Nigeria's foreign exchange rate. Now, at Steers, we really see what's happened in the last few months as probably the greatest redistribution of wealth from Nigerian citizens back to the government that's happened in the last maybe generation or so. And so what we have is now immense opportunity for the government to actually spend that, those funds wisely. And we're seeing very good posturing, at the very least, a government that's more concerned about sort of long-term structural reform. So yeah, I think as far as the macro outlook for Nigeria is concerned, there's optimism. Obviously, in the last 10 years, there's been a lot of investors have pulled out, but more and more we're seeing the return of the investor gaze, and that's quite exciting.
Thank you so much. Just to latch on what we just discussed, we just talked about the removal of the subsidy. We all know that the crude oil, or let me say the oil and gas industry, is very pivotal for Nigeria. So I want to come to you, George, and ask a question in that regard. Given the fact that the world is moving towards green energy, why do you believe that the oil and gas industry in Nigeria is still an attractive place to invest for those who want oil and gas transactions?
Okay, thank you very much. Should I put it this way, that nothing is going to happen to oil in many years to come? Green energy desirable, clean energy desirable, efforts being made in that regard, and Nigeria is contributing to that, as a matter of fact. But I would say that oil is still going to remain relevant, and we need it for energy production, and the globalization of it is still there. We can see the ripple effect of whenever there's any issue around the oil corridor, the Middle East, and all of that. Even the war that started a few days ago in Israel and in the Gaza Strip is also having a telling effect on oil. It's a commodity desired by the world to progress, to re-energize, and continue to service its industrialization. But I would say that the decarbonization of the environment is a welcome development. But I will also add that there are massive investments in the oil sector that require global participation. Just to add to what Yvette said, Nigeria has created an enabling environment for such participants of the investors globally to come into the space. Oil is not the only major thing Nigeria specializes on, or we have. In that chain, we have gas. The commercialization of gas in Nigeria by the Nigerian government has become very intentional of late. The last estimate that was made was that almost about 208 trillion cubic reserve is what Nigeria has in oil. And the investment, massive investment is going on there. It opened a wide chain for players in that sector to play. And so many situations are evolving in Nigeria that actually require massive investment. Very recently, we are trying to move away from, or in our attempt to cope with the high cost of petroleum and all of that, to begin to emphasize the CNG, converting vehicles to gas and the uses of gas. Gas will also remain as a means of boosting industrialization, like I said, and it also remains as a means of providing the energy required, the domestic gas requirement. In fact, it has not been exploited to any advantage or to any level that we can say, okay, we don't have room for investment. So it's an encouragement to investors in the room or elsewhere that there's, in that chain of oil and gas, there's room for massive investment, either for infrastructural development along that chain or developing the gas pipeline. From Nigeria, you can develop gas pipeline to Europe. What is going to happen there? Investment will be required in that region. So oil is with us as much as we're going to deal with the global issues.
Thank you so much. I think I'll agree with George. Nigeria actually has more gas than the crude oil. So as the world looks for alternative sources of power, Nigeria is a good place to start. Thank you. All right, so I move to you now, Buchi. In the investment banking space, I think when we were talking yesterday, you were talking about quite a number of what you've been able to do in the mergers and acquisition space. And as investors are sitting in the room looking to take positions or looking to exit positions, I think you can help them. So my first question to you is, what sectors are you seeing the M&A transactions in right now?
Thank you so much. So we're seeing a lot, apart from renewables, energy, so renewables, we're seeing transactions happen there. I'll say, howbeit those transactions are still at the nascent phase, it's still a new space in Nigeria, so it's evolving, and the capital requirements are not as much as for other industries. Where we've seen other transactions, financial services. In the last 12 to 24 months, we've seen a lot of transactions in the pension fund space. So we've seen a lot of asset management play. So we're seeing a lot happening there. We're also seeing that eventually insurance is going to become rife. In the last, say, 3 to 5 years, there's always been the push for insurance. However, this year, we've seen NICOM, that's the regulator of the insurers, actually support revenue generation by increasing premiums on like motor insurance and the like. So that's like the first way to cushion that effect. The next phase will then be to actually increase the minimum capital requirements, which has always been a push for the last 3 to 5 years. So we see a lot of things that will happen in financial services, non-bank financial services space. In the FMCG space, we're seeing things happening in that consumer goods space. So we're seeing drinks and beverages, transactions happening there. We're seeing like food and savory snacks. We're seeing personal care, right? We're seeing transactions in those spaces. And one area that we may likely see things is, you see Unilever is looking to divest from some of their local food businesses. You're seeing PZ Cussons announced recently that they will be delisting from the exchange and they'll be buying back their shares because it's affecting their shares offshore. We're also positioning, we're looking at what's going to happen to Guinness, Diageo, and the rest of them. That's one. Then some of them may be looking to actually sell, so there's an opportunity to come and buy, right, in Nigeria. There's healthcare. We're seeing a lot of focus on primary health care. So we're seeing new health institutions like hospitals. Then we're seeing a lot of investment in specialized health care like cancer centers, dialysis centers. We're seeing so we're trying to see how can we stop people from traveling abroad for specialized care. So we're seeing that also. And I think the last space, which is really big, is on privatized assets. So like she mentioned, the current posture of the government is to see how they can realize value from those national assets that were privatized. So you see some like distribution companies that government still has about 40%. They'll be looking to divest from some of those. You see like the fertilizer like Indorama, and you see a couple of them that were nationalized assets that became privatized, but government still has 20 to 40% stake. The government will be looking for investors to take on those stakes as well. So there are a lot of budding opportunities in Nigeria today.
Thank you so much. And I want to remind everybody we are 200 million and counting Nigerians. We have not finished counting ourselves yet. So you have the population. If you come invest in Nigeria, even without exportation, you have enough population to just take a bite at things. Yes, I know people will say, but a lot of those people cannot afford a lot of things, but the situation is improving, and I believe it's getting better. So I come to you, Sumbola. In all of these discussions we're having, I think one thing that is important right now is the issue of ESG. That's your area. And so I'm going to ask you a few questions in that regard. Just a minute. Yes. So what are the key ESG risks and opportunity in the Nigerian space?
In terms of risks, I think Nigeria shares the climate change risk like other countries. We share that with other countries. But one of the biggest areas where Nigeria will be facing risks will be social risks, because we are a large population, like you said, and the social impacts that come from climate change are going to affect Nigeria to a very large degree. You see the effect of the weather events that are happening, effects of flood, all of those will be increasing the risks and the social license to operate for businesses in Nigeria. But in terms of opportunities, I think we've all spoken about renewable energy. The opportunities for businesses now is in the transition space. Investors are going to be investing in the transitioning to more sustainable and more renewable opportunities. A lot of also investments in the social space, like I said, housing. Housing is going to be very important where a lot houses are sinking, flood is happening. There's also going to be a lot of investments in retrofitting the infrastructure we already have for what is going to come when there's climate risk. So yes, I think those areas would be the opportunities for investors.
All right, thank you. And I think ESG is also something that is becoming center stage for organizations in Nigeria, just like the rest of the world right now. So I come back to you, Yvette. What do you think, or what are your expectations for the economy in the next 2 to 3 or 4 years?
Okay. We expect a kind of J-curve effect when it comes to how Nigeria's recent policy reforms will affect the growth that we all want to see. So I think there's short-term pain that's going to happen. Obviously, with something like the petrol subsidy removal, the squeeze that has on the consumer wallet really can't be overstated. I think anyone can just imagine waking up and then having to pay, twice as or more than twice as much as you normally would have to fill the tank. That's very significant, and there are adjustments that were made all around. So, but we do expect to see that upswing in the next sort of 3 years, and for that the underlying fundamentals for us are all still there. Whether you think about the digitization of Nigeria's economy, the demographics play is still there, urbanization, financial inclusion, so all the shuns are still there, the basics that kind of drive the excitement about Nigeria's economy. I think what we've been waiting for in the last decade has actually been political will, political stamina to do hard things. And this timing, this sort of transition phase that we're in is very important for sort of realizing those growth opportunities. I will say one last thing, which is that Africa generally, and especially Nigeria, is one of those places where you can see just extremely quick sort of market activity explosion. And that's because there are oftentimes like structural issues that are preventing a market from sort of growing in the way that you expect. You can think about how digital payment services sort of exploded with the advent of USSD codes. Now, these are the kinds of things that these kind of latent demand issues that get us very excited. They're across a couple of industries where you have latent demand. Renewable energy, telecoms is still there. Digital financial services is still there as well. So I think for us, we're sort of interested, we expect that swing and we're excited to see it, yeah.
All right, thank you so much. I totally agree with you. And I would like George to speak to another industry that has surprised me in the last 1 year. Real estate, those of us that liked, or did a bit of economics in school, we learned that it's supposed to be a cyclical industry that goes down when the economy is down. But what we realized this year is that even as the economy was going down, rather than, suffer a lot of issues, the investors actually ran towards real estate, and therefore what you had expected to see in real estate didn't happen. Rather, we had some explosion and growth, and very significant increase in prices in that market. So George, my question to you is in that regard. The Nigerian economy, what are the opportunities that you see in the immediate to medium term in that industry?
Okay, now the real estate, like you mentioned, seems to have provided the opportunity for growth in terms of business development. But I would say that, yes, the challenge was there, globally and otherwise. But because of the essential nature of real estate, in particular the housing part of it, We know that Nigerian population is over 200. Some people variously put it at 200, 216. And that comes with a challenge. But in the midst of that challenge is the opportunities. That opportunity provides housing units. It's been estimated that about 28 million housing units will be required to meet the housing deficit in Nigeria. What does that mean to the real estate developers or real estate players or players in that space? It means there's huge investment opportunity. They can come in different forms, develop, you can imagine developing 28 million housing units that comes as a result of maybe urbanization, that comes as a result of a population increase, and an attempt to meet up with the teeming population needs of that space. You see, the opportunity keeps evolving. But one thing I will also say concerning the real estate is it's a sector that allows for different players. It creates opportunity for people at different levels to come into the space to play. Some will call it, in fact, to the lowest basis of calling it agency. Some come in form of building residential property, building commercial property, and some who are not able to play in that space come in the form of, okay, I'll do a JV with you. I have land, you have resources to come and do all of this. So it's a space that allows for so many things to happen in that sector that you begin to see interest, and that interest engender more income generation for that. And what we also need to know in real estate that also attract people into that space is it's not just the money you make from it, the huge money you make from it. It's a means of preservation of wealth, and it has also served as a way of capital appreciation. What we have come to know in Nigeria, for example, is that land hardly depreciates, especially when you get it right in terms of investment, the location, and where you are doing it. As long as there's no erosion in form of erosion or so. But you always get the opportunity to increase the value. I was talking with somebody before we entered the room not too long, and was telling me of the huge return on investment they make from their real estate in Abuja. So if you get it right in terms of location and all of that, there's always opportunity. Like I said earlier, Nigeria is growing, and the population is coming with advantage. And the advantage to continue to develop the real estate sector is always there. That is why you see the influx of developers at different levels doing different things. And it has come to create the employment needed too. So you can come in, although the challenge of funding is still there, but it's always have a way, because like I said, either you fund locally, you partner with offshore investors or anything. The space is always there for you to upscale your business to be able to get what you want.
All right, thank you. And I guess, that speaks to even foreign investors that might be in the room. You don't necessarily have to come and do the investment by yourself. You can come in and have partners within the country that you can explore those opportunities with. Buchi, this is back to you. So I often hear investors talking about how difficult it is for them to exit their positions when they have invested in Nigeria. So what, in your own understanding and from your own experience, what do you think an investor needs to do to enhance their exit strategies and opportunities?
Okay, thanks, Fumi. I think one big thing, and I'll talk from the standpoint of an advisor who sees both the investors and also the sellers, the target companies. I think one thing is scalability and expansion opportunities. A lot of times we see investors, for using the local words, you've creamed out the value from the opportunity at the time that you're about to exit. Then it now begs the question of, if a new investor is coming in, what is in there for me? So what we try to say is, for investors, try to think about the next 3 to 5 years. I'll give an example. I'll give an example. You're a manufacturing business and you currently have 6 lines. The 6 lines are operating at 85 to 90% capacity. That's pretty much full capacity. If you tell me I want to exit in 18 months, but I have invested $4 to $8 million on 3 more lines. The lines are currently working at 30 to 40%. And then you tell me something like, I barely use my warehouse because as we produce, we're already distributing. That tells me 2 things. There is the market and you have capacity. But if you tell me I've maxed out capacity, I don't have extra land to build a new plant, then it just tells me that that means I will have to come in and create the value for myself. So I think that's one thing of, let's investors try to ensure that at the time of existing, there's still some value ahead for the new investors. I think the other thing is also the business model. Sometimes we've seen that in certain sectors, businesses have evolved. So the question is that business still very profitable, the business model? At least at the minimum, it should be EBITDA positive at the time you're thinking about doing an exit. That's important. I think the other thing also is around market conditions. If you're doing an investment in Nigeria today, January to June was all electioneering. So that would definitely not be a time to think about doing an exit, right? July to December will be getting the posture of the new government and getting new government officials, ministers and all, and they're just getting about their strategy for the new year. So you just know that you try to plan, and that's why we say investors try to have a 12 to 24 months plan around your exit. Factor in the cycle of where Nigeria is. I think the other thing also is to think about, we have regulatory approval processes that are very protracted. So if you're doing an investment in a sector that is regulated, it's easy to just say, factor in 3 to 6 months for the regulatory approval. We have the Federal Competition and Consumer Protection Council that says at least 60 working days for that approval. And these are all timelines that feed off the day after you sign your SPA. So easy to just say that your transaction may take you 6 to 9 months to execute. You need another additional 6 months to get approvals before you actually close the transaction. So it's important that timelines are very definitive in terms of around, and I think the last thing I want to say is the exit strategy. So sometimes we as advisors, when we're doing SPAs, we'll say liquidity events through IPOs and the regular. But in Nigeria today, in the last 5 years, I can count the number of IPOs with one hand. We've only had about 3 or 4 IPOs. In fact, the other listings have been listing by introduction, means you come on the exchange, but you don't raise money. But for a liquidity event, you actually want to raise money. So the reality then is that IPO in Nigeria today is not exactly, of course, there's a lot of reforms that are going on, and the NGX is trying to encourage, but I'm just trying to say that you have to look at where we are in Nigeria in terms of planning. So if you're thinking of an exit in, let's say, the next 3 to 5 years, IPOs can be a viable opportunity because we're going to see NNPC is going to come to list, and if your other companies are going to come to list. But if you're doing something between the next 6 to 12 or 18 months, think about a secondary sale to another investor, a family office. So I think we just need to be a bit more realistic about the exit strategies that we're trying to execute. Thank you.
Thank you so much. All right, and to come back to you, Sumibola, what is the importance of ESG support to entrepreneurs right now?
I think more importantly than just ESG support would be like the bespoke ESG support that meets the particular need of the context of each business. But in terms of risk management, ESG, or the environment, let's put it that way, is an additional risk for businesses. So supporting the businesses that investors are funding with knowledge on how the environment is doing, how the social context is going to affect them, helps to manage their risk and also manage the risk of investors. Another issue, when we say ESG, I think for Nigeria, the G is sort of more important than the E and the S, because there's no point in managing your environment and your social issues if your corporate governance is not up to par. And if you're dealing with SMEs, if you're dealing with smaller businesses, you realize that the need of the businesses is really in that corporate governance structure. If you're looking to divest your own personal investment in your business, if you're looking to attract more investors, if you're looking to even expand, if we are not sort of building their capacity to understand corporate governance and to structure corporate governance properly, then that's a risky business. So I think one of the most important things about supporting businesses in terms of ESG would be just de-risking the investments.
All right, thank you. And I think speaking to that brings to mind something that I've been hearing in a lot of the sessions that I've attended today, and that's especially while talking about SMEs, the need for us to add on improvement of their structures and governance structures, even as we begin to think about investing in them. Thank you. All right, over to you again, Yvette, as we begin to wrap up. I'll go around at least one more time. So right now, why do you think an investor should consider Nigeria right now? Sell Nigeria in 2 minutes.
Yes, no pressure. So like I mentioned before, the things that have always excited investors about Nigeria are still there. What we have now that we didn't have in the last 10 years is that political will and political stamina to improve, or rather make more sort of investments in long-term structural reform, despite the short-term pain. So timing is everything. I think if there are specific industries, some of them I've already mentioned that we think are very exciting. The creative economy is a big one, the digital economy generally, and this is evidenced not just by sort of the influx of venture capital and the startup community, but also some of the larger technology businesses, the Microsofts, the Googles, that have, they're setting up sort of communities within Nigeria to upskill, to take advantage of the youthful workforce there, and the growing developer talent. So I think those two sectors, the traditional sectors, are also still very much at play: oil and gas, agriculture, et cetera. I think one thing that we are particularly excited about is consumer lending. What we see is that when people look at consumer lending, oftentimes you're looking at a screenshot, a static view of the size of the market. But we recommend, and we've actually created a sort of machine learning driven model to allow investors and operators within consumer lending to look at the entire market opportunity, to forecast what will this opportunity look like. When we disaggregate data for consumer lending, we can look at the variables that actually determine how that market opportunity would take shape. If we change this variable, if we unlock this issue, what could the entire size of the revenue opportunity look like? I would say the biggest mistake an investor can make right now, looking at Nigeria, is to confuse this sort of explosive some industries with saturation. Progress is not saturation. We're making a lot of progress in some of these more tech-driven industries, but by no means market saturated.
All right, thank you very much. And just to add to that, maybe because of our own bias in our own organization, I'd also like to add, she mentioned it, but I just want to maybe also just dwell a bit on it, and that is the issue of agriculture. Agriculture is really very important to sub-Saharan Africa, and we particularly believe that there is a lot that the continent can gain if we can actually have more processing capacity. What we have right now, we have a lot of production capacity without the capacity to process. So there is a lot of opportunities for processing in agriculture. Whatever value chain, whatever product you're looking at, there is actually a lot of opportunity and capacity that can be built there. So whether you're investing directly, you're investing in funds that fund those sectors, or you are looking to partner with players in those industries, you can talk to those of us on the stage today. Thank you so much. And now I move on to you, George. Kindly provide in your own perspective, or kindly give us a little bit of your own perspective on something that Yvette actually talked about, which is the issue of the financial sector in Nigeria. Do you still see more growth prospects with the fintech and other aspects of that industry?
Okay. The financial sector still remains viable, and it still remains the engine room of growth, and providing the support needed for economic growth. Fintech came in and they initially looked disruptive in terms of how they came, providing so many opportunities. But for me, I don't see them as being a threat to the financial sector. I rather see them as enablers. I'd rather see them as giving complementary service. In fact, on the long run, most of those banks or other financial institutions in the financial sector have come to imbibe them and are using them to cut down their operational costs, to enhance their service delivery. And so it's a complementary service they are providing. No matter how they come, in terms of how they scale up their activities to develop maybe other cryptocurrencies like Bitcoin and all the rest, it can never be a substitute or being able to take over the traditional role of the financial sector, the banks. The banks still hold the wallets, they still have the big money, they are still the one that have $1 trillion or $1 billion or whatever we have, to be able to finance all those transactions, those activities that we need to engineer economic activities in our sector. So I see them as complementary. I see them as enabling what the financial sector is doing. And if the financial sector is good, it's broad. You can, like what Buchi was saying earlier, it has the inclusion of having capital market involved there. If you are looking for funding for long-term investment, you stretch to the capital market. Like what she was saying, in recent times, there have not been so much activity in terms of IPO there. But is that market still relevant for long-term financial sourcing, for development, not for 1 year, 2 years for financing of transaction? Yes, it's still there. And it has started growing of late. In fact, local participation has gone high, but there's still room for foreign investment.
Thank you so much. You know, something exciting happened just to buttress that. I have a lady that used to work with me in the house as like a maid, and then she left to go get married. And for like 5 years that she's been married, she never had an account, and she was depending on her husband. And then when she spoke to me, some things weren't going well in the marriage. And I said, oh, I could send you some money. She said, oh, you will send it to my husband's account. I said, no, I'm not sending any money to your husband's account, because you're not going to see any of that money that I'm giving. I practically told her, you need to open an account. And then she called me after about 2 months. It took a while for her to figure it out. But she finally figured it out. And I said, what's your account number? She said, oh, it's my phone number. And so, you know, that's the exciting part of financial inclusion, what fintechs have been able to do in Africa. So she didn't have to have so much, she didn't need to move the earth to actually be able to open an account. And she was very glad that I was able to finally help her. So fintechs are really, even the banks, the commercial banks are all adopting a lot of fintech opportunities, because we really need that inclusion, financial inclusion in Africa. And just like Yvette said, a lot of activity does not mean saturation. There is still a lot of opportunity. If someone, the lady I'm talking about is in her late 20s or early 30s, and that's her first bank account. So you can imagine the opportunity that is there in the market. All right, so I come back to you, Buchi. Now, when I was making the presentation, I talked about the issue of the foreign exchange. So how are you managing the foreign exchange in M&A transactions?
Okay, thank you. All right, so I'll say a few things. I think what we try to encourage, and when I look at M&A transactions, I'm talking about the ones that are currently being structured, or the ones that portfolio companies that investors already are invested in and are managing. I think there are just a few things. One is that for those who are going to new opportunities in Nigeria, try and do a trend analysis of how Forex has moved in the last 5 to 10 years. And you actually see a cycle. There's a 5-year cycle that we technically had in Nigeria, let's say 5 to 10 year, year-on-year depreciation. Now, what we will say is it's always best to run those sensitivity analysis. So when you have your projections that the companies and the targets are giving you, try to factor in, today, when we're doing our numbers, we factor in a 10% year-on-year depreciation. So we'll say try and get very conservative around the projections that the target companies provide for you. That way, you'll be able to manage your expectations on returns and the like. I think the other thing is also to think about in structuring the contracts, are there possible risk-sharing mechanisms that allows both the target company and the investor sort of share the risks where they are very, very significant fluctuations in currency as well. That's something important. And I also encourage investors to work with advisors that have cross-border experience as well. That can help you so that at any point in time, you can always adjust your transaction structure and dynamics around where things are. And I think the last one is always monitor your investments. So sometimes it might get to the point where even it might not be equity, it might be debt that business has, and might be ballooning in foreign debt, why don't you think about restructuring, refinancing those with local currency bonds like Mr. Imadi spoke about, and debt instruments? So that's just how you just need to be. For Nigeria, I would say that for every day, there's a new, I think the only thing I would say that it's a lever for us is the fact that we have a new CBN governor in town, and the exchange rate stability is a key.
CBN is Central Bank of Nigeria.
Bank of Nigeria, yes. Yeah. So that's very key. Interest rates, foreign exchange stability is really, really key. So I think that definitely will be something to encourage investors to look at when they come in.
All right, thank you. And just the last question for you, Sumbola. What do you see as, do you think Nigerian companies are adopting ESG now, or do we still have a long way to go?
The trend right now is for investors to sort of push businesses towards ESG, foreign investors. A lot of the push, a lot of the angst for ESG is not necessarily coming internally, it's coming from foreign investors. But on the other hand, you have regulators and other capital market players that are sort of putting now ESG standards in place. I know the NGX is doing a lot of reform in that light, so that's the Nigerian Stock Exchange. They're putting a lot of restrictions in terms of your ESG reporting. So that is definitely going to push more businesses towards adopting ESG. But right now, it's all based off of what your investors, especially if you're raising capital privately, is based off of what those investors want from you. So there's still a lot of room to grow. There's also still a lot of room to standardize how Nigerians are adopting ESG, what standards they're using, what principles they're following. There's room for that as well.
All right, thank you. Before, we want to leave enough room. We have this room until 3:30 actually, but we are hoping that we will be able to relate with you and we'll be able to have some conversation with you. That's why we're not spending all the time talking. So, but before we open the floor up for questions, I'd like to ask any of my panelists, is there any last comments that you have before we take questions from the audience? Buchi, over to you.
Okay, I think I would just like to speak about deal size. So from experience, we always, in the last, let's say, 12 months, we hear investors tell us things like, my minimum ticket size is $20 million, $25 million. Now, I just want to just sort of set some context. Now, many investors are typically not looking to hold majority stakes. So you're thinking maybe 20, let me just say 25% stake you're looking to take. So 25% suggests that at $25 or $20 million, you're looking for businesses that are valued at $80 to $100 million, which is, let's say the dollar to naira is 1,000 today. That's 80 billion to 100 billion. Let's backtrack to EBITDA, that is typically the way transactions are valued. 10 to 12% like average EBITDA levels. So you're telling me that you're looking for a business that probably does about 8 billion in EBITDA year on year. There aren't that many businesses like that in Nigeria that require capital. So maybe what investors may need to think about is your $20 to $25 million, can it be phased? So can you say, okay, it's a staggered play. You say, okay, it's an opportunity that could potentially take in 25 million over the next 3 years. So can a company that can take in 10 million today and then 8 to 9 million in 2 years or 18 months to 24 months, can that qualify for an investment that will fit in? I think that's how you need to think about it. Because just to provide some context, many of the businesses that do 8 to 10, 20 billion EBITDA are largely owned by Asians, and guess what? When you meet those guys, they will tell you, I don't need money. They will tell you, I don't go to the banks. So a lot of the investments that investors, when they say there's investors in Africa, those companies that require the investment, that have those potential opportunities for growth, need sometimes 10 to 20 million. So you need to sort of start to think about, is there, when I understand, because when we tell investors tell us things like, oh, my fund size is growing, I have a $500 million fund, I can't do more than maybe 10 to 12 investments. I understand. Well, I'm just trying to say that if we must actually see more investments in Nigeria, we may have to start finding a balance between what is available and what you are able to do.
You're so right. Buchi, I still had this discussion about 3 to 4 weeks ago, and I think it was a private equity fund out of South Africa, and what we finally agreed was, okay, maybe we will batch this transaction. That means look for 2 to 3 companies that maybe are in a homogeneous industry and need funding, and then we'll look at those transactions as one transaction, and then of course we manage those transactions together for them. Because I mean, just like you've said, oftentimes the ticket size and what is available, the demand and the supply are not actually speaking to each other. Thank you very much for bringing that up. Please, do we have any questions in the room? Questions for us? Questions? Yes, please. Can we have the mic? Can we have a mic out here? Mike? Okay, yes.
One of the things which interests me is that I visited Nigeria the first time in 1995, and one of the things which has developed over this century is where are the indigenous oil companies in Nigeria, because that is where the wealth is generated. Now, you're talking about ESG, you're talking about fintech. Real wealth is the oil there. Where are the Nigerian indigenous oil companies? There's one, setback.
Yeah. Thank you so much. Sorry, what's your first name? Christopher. All right, Christopher, the same thing you've said is exactly what is happening in every industry in Nigeria, actually. And oftentimes, I don't know if anybody on the stage wants to speak to it before I answer. I have a perspective, but don't let me monopolize. Is there anybody that wants to speak to it? All right. So what I've seen, I don't deal much with the oil and gas industry, but I deal so much with the agric industry, and I see the same trend. What we see is a lot of foreign companies that come into Nigeria. They have access to capital from their own country, and the Nigerian banks are more willing oftentimes to deal with them because of their international profile. So there is no access to finance for the indigenous companies. That is the major issue, Christopher. So that's why we are in a place like this, to try and make people understand that we have a lot of Nigerians that have brilliant ideas. I know of a guy in cashew processing. He started his own factory, went to the bank, and they promised him that he should use his own money for the infrastructure and all the equipment, and they'll give him working capital. That was 7 years ago. Till date, they haven't given him any funding. Meanwhile, after he set up, some of the exporters, they come into the country to buy cashew and take to India. They then decided they wanted to set up their own factories in Nigeria. He was the one that helped them to set up their own factories in Nigeria, and they got access to finance. So at the end of the day, he had to abandon his own factory and be a consultant for the other companies, about 2 of them that he has set up so far. So this young man, if he's able to get access to finance, everything he's doing in their factory, he can do in his own factory. His own factory is operating at about 25% capacity utilization, while the others are doing maybe like 80 to 90%. So even though, excuse me, even though I've not done anything, excuse me, sorry, even though I don't have the particular answer to your oil and gas sector question, but that's exactly what's going to be playing out there. Most of them don't get access to some of those funding. Yes, over to you. Please, could you?
I also wanted to just say something about, and I agree with you, access. So if you look at many of the marginal, for the local players, they have access to the marginal oil fields.
Yes.
Now, if you look at run those models, 5,000 barrels, those kind of models, right, they're not profitable. Mm-hmm. So the reality is that those models, the models that are profitable, you have to scale up, and then scaling up requires...
You need capital.
So what you then see is that some of those oil fields, those who are local players will still partner on different oil fields,
exactly,
still with those internationals. So
yes,
there are actually sort of indigenous production and development of oils and all, but not in their personal capacity, but like in JVs and all with international players, really because of the capital.
Capital, yes.
That is what is quietly going on in the industry. It's not as if Nigerians are not participating. but in partnership.
Yeah, so, but I think what Christopher is speaking to is why are they not participating in their own capacity? We have someone else. Please go ahead. Yeah.
Just as a support to what has been said, there are quite a number of Nigerian indigenous players in that sector, not just on the marginal field side, but in major joint ventures with the NMDC. The key constraint has been raising financing.
Yes.
Some of them have actually raised significant financing. What has been happening, the economic situation had led to a situation where for a long time they kept restructuring. One of the issues that they've always faced is that you have just one company trying to take on the part. But that model, because of financing issue, better ESG, is beginning to change. We're now having injected into those companies other players that will make them more competitive and better manage their operation. But there are a lot of indigenous interests in the oil and gas sector, playing not just at the marginal field, but also playing in the joint venture. Recently, I know there have been some issues about Shell divesting. The key players who are going to be acquiring the assets as we go forward are actually Nigerian indigenous companies banding together. Because coming into this London, raising the necessary finances to acquire all of the onshore assets of Shell. That's a transaction that is happening. So apart from Seplat, there are others.
All right, thank you so much for adding that context. Please, can we clap for him, please? All right, do we have any more questions in the room? Questions? Yes.
It has been with us, but it has been a challenge part of our business. It has not really evolved in the manner it should. We have been doing a lot along the capital market axis of it to actually rev up activities along it, but I won't lie to you, it's been a slow move, but have we given up? No. Are we still doing something about it? Yes. And we'll continue to see what we can do about that space. And several risks that have come up in Nigeria have not been that successful. We must own it to ourselves. It has not been that successful. But what do we need to do? I think we are making effort. We are working with the SEC to see what can be done, how it can be tweaked, what amendment can be done to the rules that can create for flexibility for that to evolve and develop as it should be.
All right, thank you. Buchi, I think you want to add something.
I think what has really also affected the REIT market is even the underlying properties. The financing structures around the underlying properties have been very faulty. So you see people taking bank loans and all suited kind of opportunities, real estate opportunities to develop those assets. So when they're selling those assets to the REITs, they almost take out all the value. So when you bring all those properties into the REITs, the margin of growth, appreciation is restricted, which is, yes. Then we have title issues as well, significant titles. So those are the things that have inhibited, which is why really for real estate, for REITs to really, really thrive, then it has to start from how do we even fund the real estate development itself? How profitably can we fund real estate opportunities today? Yeah.
All right, yes, Mr. Ade, yes, over to you.
Okay, let me explain what it means by land banking. Like I explained earlier, the real estate sector allows for so many players in different ways. There are some that will come, they don't have the money to build, to develop or construct as it were, but they have the money to be able to acquire some asset, land. And what do? They just do the land, touch it up or create the additional value around it, and then look for opportunity either to throw it back to the market and get value out of it, or partner with others, like he is trying to say that there are some with huge asset of that nature. What is best to be done in that way? You cannot keep that asset in that manner for so long. There's a JV opportunity, like I earlier mentioned. So those JV opportunities present opportunities for you to also partner, to be able to realize the good returns on investment. Because what is it all about? You have preserved the asset, you have made capital gain from it, and that contribution you are doing by way of partnering is a value on its own to you, because it will be priced at premium other than the price you bought it.
All right, thank you so much. Do we have any questions, other questions in the room? Any other questions?
So, sorry, the opportunity exists for anybody to partner, even with us, because we are very huge in investment in that area. You can come, we talk about it and see what can be done together. If you are in Nigeria or you are looking for opportunities to partner with any locals in that area, we are very massive in that investment.
All right, thank you. Yes, please. Sorry, could you tell us your name?
Okay, my name is Mary. I'm an associate in AX.
Okay.
So we want to speak to the capital market and real estate transactions.
Sorry, it would have been lovely to get a mic for you. Could you walk towards Buchi so that she can hand over the mic to you? Thank you.
Okay, so I want to speak to her question on real estate and the capital market. There's this transaction I worked on. Because of the issue of title, what they did was the issuer raised money, acquired the real estate, and then they tokenized it. So the holders bought tokens. Now, what you own is just a little portion of the land. So it can be about 100 holders. We have title to that land, and they'll just have a little portion. So you don't have issues on title and everything. Whenever you want to sell, you're selling token. The token represents the value of the assets, the value of the land, that portion. So that way you can easily sell, and the title moves. But one company, the issuer holds title, the direct title to the asset. So the real estate in our capital market space is actually evolving. And this is a very, very good development. Thank you.
All right, thank you so much. Do we have any more questions in the room? Questions? Any more questions? All right, so we still have like 15, 20 minutes, just about 15 minutes. And we would love you to please stay back and interact with us and come invest in Nigeria. Thank you very much.